Welcome everyone and happy Thursday. Thank you so much for taking the time to join today's webinar. We'll be talking about short-term rental strategies inside of your self-directed IRA. It is top of the hour and I do want to be respectful and appreciative of everyone's time, so we'll go ahead and get started. I'm Reneika Lightbourne with Advanta IRA, and I'm honored to be joined by industry expert Rich Munroe. He's the managing member of Diamond Edge Properties. Welcome and thank you, Rich, for being our featured speaker today.
Thanks for having me, Reneika. Looking forward to it.
You're certainly welcome. So Rich is going to cover some of the basics of short-term rentals as it relates to market analysis, obviously the benefits, but also some pitfalls to avoid and be aware of, and then just his general approach in terms of investing in short-term rentals. Before I turn it over, I do want to give you just a general synopsis of what self-directed IRA is and how it works. Also, if you have questions, feel free to put those in the question box. We'll get those answered as we go, and also allocate any some time at the end to answer any additional questions. Again, I'm Reneika Lightbourne with Advanta IRA. I'm one of the business development specialists. I've been with Advanta as an employee since 2019, but I'm also an Advanta IRA client prior to joining. So self-direction is something that I personally advocate and I do on a consistent basis. If you have any questions or you want to learn more about self-direction or talk through your exact scenario, you're always welcome to give me a call or send me an email, or definitely visit our website at advantaira.com. It's a great resource, but you can also schedule some time to talk with me as well. So just a little housekeeping before we get started. Just note at Advanta, we don't give any tax, legal, or investment advice. All of the information that's presented is just for educational purposes. As always, we encourage you to do your due diligence. I know Rich will mention due diligence in terms of short-term rentals, but with any investment, we always encourage you to confer with your professional team, whether it's your attorney, your CPA, or financial advisors before making any investments. So just a little quick takeaways in terms of, this is a new concept for you. Just know that any IRA or former employer plan qualifies to be self-directed. And when it comes to self-direction, you actually, you have great flexibility. You're always in control. You choose the investment that works best for you. Today, we're focusing specifically on short-term Airbnb type rental properties. And then finally, just know that all of the income that's generated from that investment from that rental flows back into your IRA tax-free or tax-deferred. And then, of course, if there's any related expenses, whether it's related to, cleaning the property or paying property taxes, it's covered by the IRA. So just a little history about Advanta and who we are. We've been in business for 21 plus years now as one of the leading self-directed IRA administrators in the business. Our headquarters is located in Largo, Florida, which is the general Tampa Bay area. Advanta does have an office in Atlanta, which is where I'm based. But we do work with clients nationwide. We have well over $3 billion or close to $3 billion under our administration. And while we don't give our clients any tax, legal, or investment advice, our team is comprised of certified IRA service professionals and also attorneys. At Advanta, we take great pride in providing our clients that concierge-style service. So just know that if you are a client or you do become a client, you will have an assigned person that's going to be with you for the life of your account to be able to help you, again, dot those I's, cross those T's, make sure that you're doing everything in compliance with the IRS rules. And then, of course, having educational content such as today where we have experts and practitioners such as Rich that's coming to knowledge share with you on different strategies that you can do in your IRA. This is recorded. It will be uploaded on our YouTube channel, typically within 24 to 48 business hours. I would also encourage you to, again, go to our website, check out our events page for some of our upcoming educational events. Also, we have something called Pitch, Promote, Prosper. It's a great haves and wants type platform where our clients or general public can kind of see what opportunities are out there. Also, too, I would encourage you to check out our podcast, our blog. Those are all great resources as it relates to everything self-directed IRAs. When it comes to self-directed IRAs, just very simply, just know that, you as the account owner, you have complete control over your retirement funds. You have complete control over the investment decisions. Essentially, it allows you to diversify outside of the traditional stocks and bonds. Per the IRS, there's only two things you cannot invest in. That's life insurance and collectibles. Outside of that, you have, it's near limitless. You have a universal list of opportunities that you can invest in. For example, most of our clients have IRA holdings in real estate, whether it's a single family or a commercial unit. Today, we're just focus on specifically on short-term rentals, but you can also use IRA funds to invest in multifamily units. You can do notes and mortgages, private equities, oil and gas. The list goes on in terms of what's on the table for you. So a question that typically comes up in my general introductory call with a potential client is, why do people choose to self-direct? You may look to self-direct for many different reasons. I'll just touch on 3 of them. 1, it can be a new source of capital for you. So instead of, tapping into your rainy day fund or taking out a loan, you can actually, if you have an existing IRA or if you have an old employer plan like a 401k, you can actually put those funds to work to purchase that next short-term rental or do an investment. And then, of course, the ups and downs in the stock market. No one can actually time the market. With real estate, though, we know people are always going to need a place to live, specifically with short-term rentals. People are always, traveling. Rich will talk on the benefits specific to short-term rentals, but we know it's a tangible asset that's always going to retain value. It allows you to diversify outside of the traditional stocks and bonds. And then, of course, the tax benefits. Having those rents, those profits come back into your IRA tax-free or tax-deferred, depending on the type of account that you have. In terms of the different types of accounts that can be self-directed, it's the accounts that you're already familiar with. The term self-directed just simply means that you, as the account owner, you have more control over what is it that you're investing in, specifically private-related or alternative assets. But the account types are, for individuals, it's the pre-tax or tax-deferred accounts like traditional IRA, meaning you get the tax break up front, you accrue your account over time. Once you reach retirement age, when you take the funds out, you pay taxes at that particular time. Whereas with a Roth IRA, post-tax or after-tax dollars, you elect to pay the taxes up front. As long as you've held that Roth account for at least 5 years and you're 59 and a half, which is the retirement age per the IRS, then your distributions will be tax-free. If you are self-employed or have a side business or an entrepreneur, specifically, I know a lot of real estate investors, they look at SEP Simples and solo 401ks. Solo 401ks do give you, greater flexibility, higher contribution limits. Again, if that's of interest to you, we can talk about that offline. Some smaller accounts that are also just as important that can be self-directed are educational savings accounts. So if you have kids or nieces and nephews, you can certainly look to self-direct to cover their educational expenses. And then, of course, having the opportunity to self-direct an HSA. If you have a high deductible insurance plan, check with your plan provider. But if it's a high deductible, you have the ability to self-direct and cover medical-related expenses. And then, of course, any former employer plan. Again, whether it's an old 401k or if it's a 403b or 457 or TSP type plan, those types of accounts can also be self-directed. The only thing that you would need to be mindful of is if it's a current employer plan, meaning you still work there and you're not yet 59 and a half, most times they'll tell you, no, you can't move it. That's industry standard per IRS guidelines. So if it's an old employer plan, you can move it, no issues. If it's an IRA, you can move it, no issues. But if it's a current plan and you're not 59 and a half, then most times there's restrictions. You can certainly see if they'll make an exception for you. The other way that you can also fund your account, in addition to making an annual cash contribution, I'll talk about the amounts, is again, if you have an IRA, an existing IRA, let's just say at a brokerage firm like a Fidelity or a Charles Schwab, you can move as much or as little as you want to or need to. There's no tax liabilities for you to do that. If you have an old employer plan, again, like an old 401k, you can go ahead and move those funds. In that case, you're not taking a personal distribution. It's just going from one retirement account to the next. We'll be able to walk you through that process, but if it's an old employer plan, you would actually have to reach out to initiate to have those funds moved over. The other way you can fund your account is through making an annual cash contribution, as long as you have earned income. So for traditional IRAs, the contribution amount for 2024, traditional Roth, if you're under the age of 50, you can put in $7,000. If you're over the age of 50, you have the additional $1,000 catch-up where you can possibly put up to $8,000 as long as you have earned income. For SEP IRAs, the higher contribution limits of up to $69,000, up 25% of your earned income. With the solo 401k, again, it's greater flexibility where you get to contribute twice in a sense. Obviously, contribute as an employee, and then you get to match up to, as an employer, up to 25%. So you can put up to $69,000 if you're under the age of 50. For an ESA, you can put in $2,000 per year per child. With an HSA, you can put in, for individual plans, you can put in $4,150. For a family plan, you can put in $8,300 for 2024. If you're over the age of 55 for an HSA, you do have an additional $1,000 that you can stuff into that HSA account. So the process for us to get started is pretty straightforward. We've really streamlined this for our clients in 3 simple steps. Step 1, you can go to our website and advantaira.com and fill out the application, or you can reach out to me or one of my colleagues and we can send you the paperwork. But essentially, for the IRA accounts, you can do it electronically. You can complete everything within 15 minutes or so. We'll be able to walk you through the paperwork if you need help. But again, you are assigned an account manager once you officially become a client. Step 2 is funding. Again, you can transfer from an existing IRA, do a direct rollover from an old employer plan, or a combination of making annual cash contributions. And then finally, step 3 is start investing. What is it that you're interested in? If short-term rentals is your preferred strategy, or something something that Rich says today that resonate with you and you want to pursue that through your IRA, then definitely that'll be the third part of the process for you. And with that, I'll go ahead and turn it over to our speaker, Rich. Just bear with me one moment.
I wanted to, before I get started, tell you guys kind of a brief story about how I got started in real estate. It's totally relevant to what Reneika just covered. I was in a different industry before I did real estate, and I basically was in the consumer finance space, and my entire business was buying past due and non-performing debt from banks. And in 2008, with the recession, they basically, that industry kind of came to a screeching halt as they wanted banks to be more conservative and to stop selling their debt in the secondary market. And so what I did, kind of leading up to that, because I kind of saw the writing on the wall, is I converted one of my retirement accounts from my previous employer into a self-directed IRA. And I started in real estate with tax lien investing, which is definitely a good way to go. It's a slower burn. It takes a little bit longer, but if you've got some patient money, like in a retirement account, it's a perfect fit for that. So I basically strategically over about 6 to 12 months, did a sampling of different counties here in Georgia, and really just wanted to prove out the process from start to finish. Went to the auctions, did the due diligence, bought the tax lien, met with the attorney to do the legal work that's required after the redemption period to give the notices, and basically was able to, show a case study of how the tax lien process works. And ultimately then, as I shifted gears and kind of shut my old business down on consumer finance and focusing more on real estate, I was able to secure a $10 million credit facility from using my self-directed IRA to kind of prove out that model. And so it's definitely a good way as well if you're trying to create a bridge into getting into real estate investing, depending on what your interest is. By using your self-directed IRA to do that. And it's a very smooth process, especially if you engage with folks like Advanta that can help you with the disbursement and the investment strategies, as well as keeping track of those investments as a part of your self-directed IRA. So before I jumped in, I just wanted to kind of give you guys that overview. It's kind of a direct result of me being able to continue to grow my real estate business by having that start in the beginning, and definitely a good way to do that. So before I jump into the slides, I do want to make this, as Reneika mentioned, super informative for everybody. I am going to go through some slides and an overview of the short-term rental market analysis, some of my history, some of the properties we're seeing, what we're seeing in the marketplace, and what to look out for. So as I'm going through this, I don't want this to be a one-way street. Feel free to throw some questions in the chat as they come up, and I'll get those addressed as we go through. We'll also allocate some time towards the end as well for any questions. And so with that, again, don't be shy. Feel free to throw your questions in the chat, and I would be happy to kind of take a break and address those questions. So let's dive right in. So B&B Investing Group is the platform I currently have, and I basically help real estate investors build a scalable business with short-term rental model. there's a couple of different strategies that I'll get into as an investor that you can get into. And so, my background and history basically has been, like I mentioned, starting out with tax liens. And so, having used the self-directed IRA, I probably purchased and acquired about 8 properties in various counties in Georgia, and was able to then secure a $10 million credit facility. So we got very aggressive with going to tax lien auctions. Maryland has a very similar process as well, and so we were able to acquire some homes and properties in Maryland through the tax lien investment process. And through that, really got to see the worst case scenario of properties. Properties that have been sitting vacant and empty and dilapidated, needing in a lot of cases full gut rehabs. And then also started to do fix and flips from that process. And we're at its peak, we were probably doing about 7 to 8 fix or flips a year. I very quickly got burnt out on that. The money was great. However, you're constantly kind of robbing Peter to pay Paul for the financial stress as you're getting those properties ready for sale, any kind of delays. And then obviously the contractors that don't show up and you have to rehire. So didn't really see a scalable business in that. And so I started, like most investors, to develop a long-term rental portfolio. And we started converting some of our tax lien properties over to long-term rentals. We started keeping some of our fix and flips. And you're told as an investor that you're doing well if you can clear $300 to $400 a month on each of your long-term units after your debt service. And so you got to really mass up a large number of properties in your portfolio to get to a meaningful number. And at this point, I'm doing this full time, and that was really for me kind of not feasible to go that route. The other thing that kind of enlightened me and got me to the short-term rental model was, even though we have a lot of property managers managing our long-term rentals, having to evict people right before the holidays and then having to rehab the property again. And guess what? After a year, your profits are very minimal and very tight. And so when I looked at the short-term rental model, it was like a light bulb moment. The properties stay in much better shape. And that very same asset that you do as a long-term rental, you're able to generate 2 to 3 times the revenue. Yes, there's a lot involved, a lot of work involved, a lot of moving pieces, but if you put the right systems and processes in place, you can definitely scale and add more units. And so built up a portfolio of 75 properties, all doing short-term rentals, mostly here in Georgia. I also expanded down into the Tampa, Florida market. We had about 20 properties down there, all single family, 3 and 4 and 5 bedroom homes that were all exclusively set up for short-term rentals. And so through that process, also became very active with Airbnb, and I'm also an Airbnb ambassador and an Airbnb community leader. And so we have a lot of different activities throughout the year where we help other hosts get their listings set up and have a different part of the platform on Airbnb to kind of facilitate that. One of the big things with short-term rentals, if you are looking to invest in this model, the major kind of hindrance is going to be regulations and ordinances. There's a lot of different cities and counties across the United States, and I'm going to kind of give you guys some details on that. So that kind of hit home hard here in 2021 when the City of Atlanta voted to approve a very non-investor friendly short-term rental ordinance. And so with that, I was able to form a nonprofit called Amstra and formed a board of directors to basically combat and kind of have that conversation with Atlanta to redo the ordinance. We've been successful in getting them to delay enforcement, and we're currently negotiating with them now. I'll give you a little bit more details when we talk about the regulatory environment and what's going on there. As I mentioned when we first got started, I do have a group called B&B Investing Group where I do masterminding with other investors and kind of sharing ideas as well as common practices and being able to look at all the different service providers that help automate our business. And so we'll talk a little bit about that later as well.
Okay, Rich, a quick
So,
question that came in.
yep.
Do you invest in or do you intend to invest in other states outside of Georgia and Florida, like nationwide, or is it just strictly those two states?
Yeah, great question. So we are actively looking at opportunities in North and South Carolina and as well as Tennessee. And so we're kind of looking in the Southeast. I have other partnerships in other parts of the country, on the West Coast in California and Arizona, as well as in Texas. There are also big short-term rental markets there too. So we have different partnerships with other investors that are similar to me, that have a lot of large number of properties, and we can kind of do joint ventures that way as well. But in my consulting business, I help folks do this kind of all across the United States. It's not limited to just Georgia and Florida.
Okay, thank you.
Sure. So, one of the things that makes this short-term rental model kind of feasible and an option for not only real estate investors, but for a lot of folks to be able to have an option to supplement their income, of course, is the Airbnb platform. Brian Chesky is the CEO. Within the last year and a half or so, they've gone public and had extreme growth. And so a lot of the reason why short-term rentals are something that you can do really in any market. You don't have to be in vacation spots or in hot spots in cities. This works very well in different suburban markets, even rural areas. Anywhere that you have a property, there is the prospect to do the short-term rental model, and that's mostly due to the success of the Airbnb platform and what they've put together as the ability to have this as an option. And so there are a lot of other platforms that you can employ that we do engage with, but no matter what you do, most of your revenue is going to come from the Airbnb platform. And it's based on that peer-to-peer ability for individual folks to be able to list their properties and start making revenue eventually, right away. And it is something that has been a saver for a lot of people that have been able to supplement their income, rent out a basement in their home to help pay the mortgage. There's a lot of younger folks that are house hacking and buying a duplex or a triplex or putting a tiny home in their backyard and generating revenue with this. And so it's become quite an interesting option and another way to be able to invest in real estate and generate revenue. Even though this Airbnb has been around for over a decade, I view this really as the starting point of growth. The platform on Airbnb globally continues to grow. I think last July they had the highest number of folks that had booked at a short-term rental in history. And so this is a model that is continuing to grow as we move forward, and definitely sees further growth. Evidence of that is a lot of the institutional investors have raised a lot of capital. There are, new construction projects that are getting put up in major cities where they're basically purposing it specifically for short-term rentals. They also see the advantage of and the financial gain to do this instead of doing long-term rentals, and basically has become a popular option. Very similar to hedge funds going out and kind of doing build to rent for long-term rentals. They are also doing the same thing for short-term rentals and being very strategic about the portfolio.
Two quick questions, Rich, that just came in. It says, how do you determine where to invest in short-term rentals? Are you specifically targeting downtown areas, high traffic? Or are you looking at college towns or proximity to attractions? That's the first question.
Yeah, so that's definitely something I'm going to cover here in the next few slides. And so let me table that for just a minute, and I'm going to dig into that in just a few more slides here.
Okay, and the second question probably you'll be able to answer that shortly as well. It says, do you recommend a niche within the short-term rentals, like pet-friendly, eco-friendly, like tree houses? Do you have specific niches that you see that do better than the next?
Yeah, absolutely. And so, one of the things that I do with B&B Investing Group is I have a Facebook Live every Thursday. And I actually have one today at 5 o'clock Eastern. And so what I do is I talk to different investors about just that, their unique niche. There are investors that do short-term rentals specifically with container homes, tiny homes, tree houses. So there's a lot of different niches, and there's, you know, luxury tents. There's a lot of things that I cover in my group, and I'll give you guys the opportunity to join that group so you can get access to that. But it is a very interesting opportunity within the short-term rental space for a lot of different niches. And since COVID, Airbnb has kind of redone their platform where folks are really traveling more for the experience, not necessarily for the location. And so the platform now is focused around giving people the option to be able to stay places based on category, right? So you can say, all right, I want to stay at a tiny home. I'm flexible on my dates. I'm flexible on the location, and I'm okay with anywhere in the Southeast. And it'll kind of give you some options that are specific to that category. And so that is definitely a good way to get into this, is kind of choose a niche that that you have an interest in, as well as a lot of those niches have been very successful and really commanding a premium over what you can get. So the Airbnb platform, you know, there are some things, again, that Airbnb does that makes it very successful. Very simply, they charge the host 3% to list their property. So for 3% of all of the booking revenue, you as a host are able to list your listing on the platform. There's what's called a superhost status, which is one of the first things we teach folks how to do, is to become a superhost. You kind of get more exposure on your listings that way as well. Like I mentioned, Airbnb is a global platform. They have insurance that covers you as the host for anything that gets damaged during the guest stay. We use that quite a bit. There's no deductible. And so that way you're kind of covered for any damage that might occur, you know, at your property in your location. So let me dig into that question about, you know, market research. Where are some good areas? There's a platform that's not related to Airbnb. It's called AirDNA, and they are basically doing data scrapes of all of the available short-term rentals on the Airbnb platform and VRBO, and gathering historical data for each market. And so this is something that gives you an insight as to just that question that was asked. You know, what are some good areas to invest in? What are some areas that are not so good? And have the ability to run that analysis. Now, you can run this on any marketplace. I've chosen Advanta. That's kind of where most of our properties are. So, but you can see these same statistics in your market as well. I'm actually going to ask Reneika to put a link into the chat for access to a 45-minute. I did a more deeper dive webinar on the AirDNA platform, how to navigate it, how to research different markets, and kind of gave a walkthrough on in a lot more detail than we're going to be able to cover today. And so if you're interested in getting access to that replay for that training webinar that I did, Reneika is going to put a link in the chat for you guys to access that. And so this is again a good tool to kind of look and be able to poke around and see what the markets are doing, right? So just to kind of look at the different things that are covered. Obviously, the makeup of the listings by rental channel. So, you know, as I mentioned, most of the activity is going to happen on Airbnb. Some of it happens on VRBO. A lot of folks that do this professionally will list on both platforms. I personally also list on Booking.com, Google Travel, Marriott Homes and Villas. Even though they're a hotel brand, they actually recognize the value of having a local presence, and folks that are booking stays in you know, homes that are convenient, larger kitchens, and getting more of a local feel. And so that's another option to do. Now, most markets are going to have a similar stat breakout of the size of the rental. You know, most markets are very similar to what Advanta is. The majority of the activity or availability is going to be in your 1 and 2 bedrooms. You know, as you can see here, north of 65%. And then as your property size gets larger, you are going to see less and less listings available. And so one of the things that I did when I got started, and I think most people that get started implementing this, is you figure, I'll do a one bedroom, a one bedroom is similar to a hotel, should do fine on Airbnb. So most of the activity kind of starts out with one bedrooms. Now the reality is there's a lot more success, consistency, and demand for larger properties. There are groups that are traveling for work, for family events, and they are recognizing the economic value to stay in a 5-bedroom instead of getting 5 different hotel rooms. It just makes logical economic sense for them. And so there's a lot of demand for the larger properties. So as we look at this strategically, as you're thinking about the type of property you might want to invest in, just keep that in mind. Obviously, to set up and stage and furnish a 5-bedroom is going to be a lot more money than a 1-bedroom, right? But you're going to get a lot more in return. We're going to take a look at some of what the potential numbers are as well on some of the larger properties here in a few. So this has been the rental growth. As I mentioned, listings are continuing to grow, even though Atlanta had regulations that have been restrictive. We have still shown a large number of listings coming into the marketplace. Those of you that may already be following, what's going on with short-term rentals have probably heard some of the negative connotation around occupancy levels going down, nightly rates going down, people complaining about cleaning fees and kind of gravitating back to hotels. The reality is the occupancy levels have really been pretty steady and kind of consistent with where we were post-COVID, right? And so a lot of us that have been doing this for a while, I've been doing this for 9 years. We experienced a lot of activity. Obviously, during COVID, there were a lot of cancellations for that 30-day window, but once things started opening back up, it allowed for folks that were doing remote working and staycations and things like that. So we had a lot of activity. And so what's happened with the slight increase in supply and the demand is still kind of steady, but it's being outpaced slightly by supply, is that a lot of folks that might be doing this as a hobby, that are just have one listing, they're not tying into integration tools like price optimization tools that make adjustments based on supply and demand. They are not doing as well as they would have been able to do pre-COVID. And so it's become to be a lot more competitive. And so that is what has been some of the recent rumblings, if you guys have been following this in the last year or two regarding that. But as you can tell by the historical data, that dark blue line is what we did in 2023 for occupancy levels. It's really just a little bit below where we've been in the prior years, and is steadily increasing. Kind of the same thing with revenue, a similar picture. It's good to kind of look at the data to understand, what it's actually doing compared to people just making general statements about it. Same thing with the nightly rate.
I did have a quick question that came in. It says, do you target properties that are underrepresented or try to carve out the market share from the higher requested categories?
Yeah, so I touched on the fact that the larger homes tend to do better with occupancy levels as well as profitability. And so a lot of our portfolio right now is shifting to focus more on some of the 4 and 5 bedroom homes and some of the luxury homes as well. We have properties up on Lake Lanier that have a dock and amenities and jacuzzi tubs. And so when you try to look at where can you maximize your revenue, that's one of the ways to do it strategically. I will say though, I like and I recommend being diverse. I mean, we do well with properties that are in the suburbs, like Buford, Georgia, which is 45 minutes north of Atlanta. We're on the south side in Fairburn and in Fayetteville. And with a 4 and 5 bedroom home, you can do extremely well in the $6,000 to $7,000 a month in gross rental revenue. So it's good to kind of, if you're starting with a clean slate, to kind of gravitate to where the best opportunities are. But honestly, if you already have an existing property or the folks that you're engaging with already have existing properties, I would start there and run an analysis to see what those numbers look like for that market before you kind of, start from fresh. But and that's one of the things, again, the AirDNA platform helps you do. Besides giving you, the average across the board occupancy rates and nightly rates and revenue, they also give you kind of a rating system based on the market, how the market's performing. And it's based on a combination of looking at what they're calling investability. And so how much does it cost to buy that home in that market compared to the potential and rental revenue? Rental demand, rental growth, seasonality, and regulation. So all those attributes are kind of combined to basically look at that score. It also allows you to slice the market, right? So these are the numbers for the entire city limits of Atlanta as an average across the board. So this is all property sizes. And then you can also drill down to a sub-market, right? So there's neighborhoods that might be a little bit better, zip codes that might be a little bit better than others. And so you can kind of look at the sub-market and drill down into those details on the chart level of what the historical has been. There's a lot of different platforms that do this. AirDNA, in my opinion, is the better one. They've got about a 5-year history that they've been tracking this. And so you can actually look at a market's history over the last 5 years and be able to determine not only historically, but it'll also give you the option to provide a forecast based on historical data and based on what the comps are currently doing. And so, this goes back to the earlier question, how do you navigate to figure out what market is doing better than the others, or kind of where to get started? This is one of the ways to do that. And so once you drill into the submarket, so this is in East Lake Atlanta, this is East Atlanta neighborhoods. And as you can see, the averages are a little bit better than the Atlanta Metro based on revenue and occupancy. And you can actually drill into, what are the active listings in that market? And so without doing too much work, you can, at the click of a button, in that submarket in East Lake, look at all of the active short-term rental listings and be able to drill into not only what their revenue potential is, but what their historical and current activity is. And so, again, I think this is valuable for when you're trying to make decisions on what market to invest in. And it gives you immediate insight as to what's going on in that market as well. And that's part of what I kind of go through in that webinar. I go into a lot of details on the best way to kind of use this tool to make those reviews. Now, this is a recent addition on AirDNA, which is great as well. So as you're investing, you don't have to go to MLS separately or kind of look at Zillow. It will, at the click of a button on another tab, in that same submarket, it gives you access to the properties that are for sale and also pulls in the short-term rental revenue potential along with occupancy and the daily rates. And so that kind of saves you some time. Essentially, AirDNA has got a direct tie-in to the MLS in each of the markets, and they're basically pulling in all of the market data for those properties that are currently for sale in those markets. So by way of example, this is Beaufort I mentioned earlier. We do quite well. We've probably got 5 or 6 properties that are 4 and 5 bedroom homes that perform very well. As you can tell, the average nightly rate, $300, occupancy 56%. And you don't have to be in city center to kind of have good opportunities there. So same thing, gives you the same access, shows you the listings in that market and the properties for sale, and kind of gives you a good sense of what the potential is in each of the markets by doing that. Here's some of the kind of the national statistics on occupancy by looking at not just Atlanta, but looking at all of the United States. And so like I talked about before, 2021 was a very, a lot of activity, a lot of occupancy levels, a lot of people moving around. And then in 2024, we've kind of dipped back down with a little bit of lower occupancy based on the recent months. This is actually looking at how many new short-term rentals are coming into the market month over month since 2021, and like I was saying, the supply is continuing to grow. Here's a look at kind of the United States compared to the Atlanta market. And again, even though we had some of those issues with regulatory environment being challenging, we still had experienced growth. And we see that in some of the other markets too, with probably the only exception would be somewhere like New York City, which they've basically shut down a large number of units at one time. But what we did see as a result of that is a lot of increase in markets like the New Jersey market as those became more restrictive. So it's always good to kind of understand what's going on globally as well. This is another interesting way to understand what your differences are based on the size of the property, but not only the size, but the type, whether it's a budget, economy, mid-scale, upscale, or luxury. This is a heat map kind of showing occupancy levels. And so, like I mentioned before, you're going to have more occupancy and demand for those larger properties, 5 and 6 bedrooms, as you can tell here, and even the budget properties that are not necessarily high-end or luxury or in anywhere special are actually a lot more aggressive with occupancy than some of the others. The other thing to keep an eye out on is how occupancy levels are growing market to market. And so you can kind of understand where your market that you're targeting compares to the rest of the states. And so it's always good to kind of keep an eye on that, and especially if you're starting to invest in a particular market, to have a good understanding of how your market is doing compared to a lot of the other markets. And there's a lot of different ways, a lot of data that you can review that allows you to understand as a percentage what's the growth, whether it's the occupancy levels. You can also look at revenue levels as well. So let's talk about the elephant in the room I mentioned earlier, the regulatory environment for short-term rentals. I look at this more so as an opportunity and less of a hindrance. We have a lot of these major cities across the United States, including San Francisco, where Airbnb was formed and started, adopt this primary residency requirement, which basically limits it as an investor. And so one of the reasons why that is kind of the starting point model legislation, unfortunately, that Airbnb pushes, Airbnb got started as a home sharing platform. And so the very first Airbnb guests, the founders basically were college kids in San Francisco. There was a big conference that came into town. All the hotels were booked up, and they recognized the opportunity to rent out a couch and a blow-up mattress. Those were the first few Airbnb guests that got this whole process started. And so even to this day, there is a subset of each market that folks are still renting out a couch or renting out an individual bedroom and more of a home sharing format. So what's happened not only in the States, but across the world, anytime there's a rumbling of a local jurisdiction wanting to restrict short-term rentals, Airbnb will push their model legislation, which basically, from their perspective, rather than outright banning it in a jurisdiction, they want to say, well, we should make it available for people that have a primary residence, that live there, that want to supplement their income. And so every single one of these cities on this map have kind of adopted that, including Atlanta. And basically what that does is it limits you to one property or maybe one more. The regulatory goals, unfortunately, the reason this comes to be, a lot of people deal with the bad apples in each market. And so a lot of times it's the neighbors that are complaining. It's the first time that city planning departments hear about the short-term rental model, and that's usually when they start wanting to restrict it. And unfortunately, a lot of these cities, New York, the host must be present to do the short-term rental. San Francisco, the same thing. Los Angeles has to be your primary resident. Washington, D.C. must be your primary residence. Chicago, same thing, although you can do a hotel license to get multiple units set up. Boston must be your primary resident. Seattle, primary resident plus 1 or 2. And the Atlanta, it shouldn't be surprising. That's why Atlanta adopted a very similar ordinance based on that. Now, with forming the Atlanta Metro Short-Term Rental Alliance, like I mentioned, we raised some money. We kind of raised a legal fund. When this was voted in 2021, I had 32 properties in the city limits of Atlanta. I live in Beaufort. I was not able to legally apply for a license. So we formed this group, we raised some money, we hired an attorney, we actually filed a lawsuit against the city of Atlanta and explained to them that we want to protect our members for property rights and grandfathering rights. And we would prefer not to go that route. And so we've been in conversations and negotiations with them. We have a lobbying team as well. And we are pretty optimistic that we are going to get them to redo the ordinance. They have not been enforcing it up until now. They've been delaying that until we can finish negotiating. And so if you're interested in the Atlanta market or you want to get updates on what's going on, we also do in-person meetings in the Atlanta area. You can scan that QR code to check it out, or at least join and be aware of it.
I have 2 quick questions about regulations, if you don't mind. It says, are there any sweeping national regulations that's in the pipeline specifically for short-term rentals, or will it always just be localized to a certain area or city jurisdiction?
Right. So that's a great question. There is nothing that I know of on the federal level that will address this. It has been very local. Like I mentioned, New York got shut down with a lot of listings. There have been some rulings in different Supreme Court districts, like the Fifth Circuit. They have basically helped us in our argument in Atlanta, where the New Orleans is basically, the Court of Appeals has basically deemed it unconstitutional for a local jurisdiction to require you to register and get a license. And so even though Atlanta's not a part of that district, they recognize that being a precedent. So the primary residence is going to be stripped away from Atlanta based on that. There have been some other developments in Wilmington, North Carolina, for example. There was a favorable ruling that required short-term rental registration fees to be refunded in their process. And so there's nothing on the federal level, but there are various states, Georgia being one of them, that does have a pending legislation that basically does a preemptive bill across the state of Georgia to basically restrict any local jurisdiction from being able to ban or restrict short-term rentals going forward and allow grandfathering rights. And so there are a couple of other states besides Georgia that have adopted this. And then that way, that kind of, as an investor, it helps us at least to know that that entire state, it's not going to be a concern or an issue going forward. And so that is something in the works. But as far as I know, there's nothing on the federal level right now that will address this. It's usually at the state, county, or city level.
Okay, another quick question, and then also a question about how do people invest with you. It says, how do I find out the correct info about my local area regulations and or ordinance regarding short-term rentals?
Right, so what I would encourage you to do, 2 things. One, a lot of times this moves very quickly in local cities and counties. It takes a couple of city planning meetings, a neighbor to complain, and then all of a sudden the city planners are voting on making a change or putting a rule in place. So the very best thing to do is when you're researching your city or your county is basically pick up the phone and call your local planning department. Look at their website, Google short-term rental ordinance and that city location or that county location. And usually if they have something already in place, it'll come up. But I found the best thing to do is really pick up the phone and basically call them to get real-time information. If they don't know what you're talking about, then that means they haven't put anything in place yet, or they can direct you to the right place. So another good place to start is the business license department, because usually when they have regulations in place, that's where they're going to define the rules and require you to file for a business license. So I would start there. The other thing to do on the national level, there's an organization that actually got us helped to get our nonprofit started in the beginning, and they do lobbying efforts for short-term rentals on the national level. It's a group called Rent Responsibly. So if you go to rentresponsibly.org, there'll be a map on there where you can click and see, and find out who are the local associations that are helping out with lobbying for short-term rentals in that market. And so AMSTRA is actually, if you click on Atlanta or Georgia, AMSTRA will be there, our website will be there. So whatever your market is you're looking at, you can click on that website and be able to determine and find out which association locally you can tap into that can provide you resources to help understand what the short-term rental rules are in that local market, if that makes sense.
Okay, well, another question that just came in, it says, if you don't own a second home, can you still join, meaning join your nonprofit group to stay informed that when you'll be ready to invest?
Yeah, so the first membership level is 0 to 4 properties. So you don't have to have a property up and running yet to join.
Okay, and an investor-related question it says, how do you invest with passive investors? Do you invest alongside of them? Can I use self-directed IRA money to invest with you?
Yeah, so we do, and I was going to get into a little bit about how we structure that. So we do work with investors on our projects, and I usually like to kind of meet and figure out what your individual goals are, and we can kind of be flexible, whether it's done as a self-directed loan in the IRA with a interest rate, or if it's done more as a joint venture with a revenue share. And so there's different ways to do that we can determine on kind of like an introduction call to see what your objectives are strategically with your investment strategy.
Okay, thank you.
Sure. So I wanted to kind of, I know we got a little bit of time left. I'm just going to kind of go through this pretty quickly, just to show some of the different property types that we've been successful with. When people hear about short-term rentals and they hear about the rental arbitrage model, master leasing is really a good way to get started in the beginning. Even though I had properties that were rental properties, when I first started this model, I did master leases with different owners for the purpose of doing short-term rentals. So we did that with this quadplex. This is in Virginia Highlands in Midtown Atlanta. We also did that with this 8-unit building. And what tends to happen is we help those owners of the buildings in multifamily to basically limit their vacancies. It's less of a hassle dealing with the short-term rental than it is with long-term tenants in some cases. So we can commingle short-term with long-term strategically. And we're also doing that with acquisitions now. So this is a quadplex new construction that we did, all of them as a short-term rental. This was a 22-unit building that had been recently rehabbed and had 11 units sitting empty. And so within a 30 to 45-day window, we were able to get those 11 units up and running, generating revenue, and basically created that partnership. We used noise detection devices and things like that, outdoor surveillance cameras, to be able to kind of coexist with long-term renters. And we can do that strategically in multifamily buildings, which works well. This is another one that we did. It's a 27-unit building. We started with 4 units. We ended up having 15 units that were all doing short-term rentals. In a really good area in Atlanta, kind of a view of the skyline from the rooftop. So the occupancy levels were pretty good, walkable to Piedmont Park and the Beltline and a lot of the hot areas as well. And so just to give you a high level numbers, this is one of the 1-bedrooms for that location. Even at higher occupancy rates and higher nightly rates, on a long-term rental in this 1-bedroom unit, the landlord can get maybe $1,500 a month in rent as a long-term rental, but doing short-term rentals, you're about $3,800, and so you're always going to be about 2.5, 3 times what the revenue is. It's another example. As I mentioned before, it's not only just one bedrooms that this model works well with. This is a 3-bedroom house in Tampa. Average rate of $212 a night, 65% occupancy. So we're generating $3,400 a month in revenue. And again, compared to what you can get as a long-term rental, it's a much better situation. This is a 5-bedroom home in Beaufort. I talked about Beaufort earlier. $329 is an average nightly rate, 71% occupancy. So you've got probably 4 or 5 different groups coming throughout the month, but you're making close to $6,000 a month in revenue. So definitely, again, the larger homes works well. This is another 3-bedroom. We talked about niches. This is a horse farm in Gainesville, Georgia, that sits on 5-bedroom, sits on a hill with a pool, overlooks horses, and has options for the guests that go there for horse riding lessons, pony riding and stuff as well. And you can definitely get into the 12,000 plus revenue range with that. Now, I just want to walk you through whether you're doing this investing strategy with me or another operator manager that's specializing in short-term rentals. One of the things that we do that's key, when we go into a market, our objective is to exceed the average market price by about 20 to 30% after the first 2 or 3 months. Make no mistake about it, this is a hospitality business. It's all about the review process. This is a 4-bedroom home in Lawrenceville, Georgia. Lawrenceville is nowhere close to Atlanta. It's probably a 45-minute drive, but it's a nice house, as you can tell, outdoor kitchen, pool. And so the average market price for a 4-bedroom house in Lawrenceville is $350 a night. And what we do over time, as we build up those consistent good reviews, we're able to command a premium where we were up to about $900 a night as a rate on this property. And so building up that strategy to get consistent 5-star reviews, that gets you in a place that you're able to start creeping up the nightly rate. So you're going to be, more expensive, but folks are going to book with you because of the positive reviews that you get. And that's kind of the strategy we take on all of our investments. We compare to what the market is doing on the nightly rate. The blue line is Diamond Edge. The red line is the average. Same thing with occupancy levels. Historically, we always want to be overachieving and beating what the market is doing. And that's something we pay close attention to. I mentioned earlier too, we have different categories. We don't only use Airbnb, but we're also on other platforms. We want to maximize exposure, and it's all about profitability, maximizing bookings, and getting bookings right away. We're also in kind of the luxury market. This is a property on Lake Lanier that we are going to average. We've been averaging about 600 to 700 a night during slow season and about 900 to 1200 a night during peak season. It's in a great location on the south side of Lake Lanier with a dock. This was a full gut rehab. The house was originally built in 1960. So we have different investment opportunities that include these types of properties as well. We'll come in and do a full gut rehab, get it set up as a short-term rental, and be able to generate revenue. So this one will do $25,000 a month during the peak season in rental revenue as a part of the strategy. We also have other properties on the lake as well that do well. And then strategically, we also look at multifamily acquisitions. And so this is a 16-unit residential unit in Chattanooga, Tennessee, where, again, the owner of the building had done a recent rehab. The lower level has got commercial retail space, and the top level has 1-bedroom apartments. And ironically, after they did their rehab, they were able to get all of the commercial, surprisingly, booked up, but they've only been able to rent out 4 of the top units. And so there's, basically 11 units sitting empty. And so that's another strategy we have. We can come in and do an acquisition of this multifamily project and immediately start generating revenue with those 11 units. Obviously, the first thing we want to do is check the regulatory environment. There are rules in Chattanooga, but it's actually favorable where it's you can do it in a commercial zone property. And so that lends itself well to that opportunity. And again, it's more so an opportunity for regulations than a hindrance, as long as you understand what it is and you're able to navigate around it. This is another option for multifamily. This is in Gainesville, Georgia, and it's a historic building. The top three levels are all residential 1 and 2 and 3 bedroom apartments. The bottom 2 levels are retail space. And so the second level actually has more of a WeWork environment where there's a bunch of private offices that haven't been doing well. So the strategy here is to come in and convert that second level to 1 bedroom units and be able to do short-term rentals with them to basically maximize revenue on the asset. Same thing here in Gainesville, they only allow short-term rentals in commercially zoned areas, which again gives us that advantage for additional occupancy levels as well. The last investment type that I'll talk about, which we've been doing strategically now, as you guys know that you've been watching real estate market, interest rates are very high. It's very competitive in buying investments. And so we are constantly looking at opportunities that are either creative financing, where you have a seller that's overextended, or they have a current mortgage debt service that's got a lower interest rate, where we can step in, give them cash for their equity, and basically take over their existing mortgage. It keeps our monthly expenses lower, and we're basically going in as a short-term rental and being able to basically, make that short-term rental revenue and a big enough spread between what the debt service is. And so it also lets us inherit the lower interest rate debt in the 3 to 4 and sometimes 5% interest rate, and allows us to get into properties quickly, turnkey. They're already fully rehabbed, and we just get it staged and furnished, and we're off to the races with it. So I know I've been trying to hurry up because I know we're close on time. Here's the QR code if you guys would like to join my Facebook group. Like I mentioned, I do a weekly Facebook Live. I talk to different other short-term rental investors that are successful. We talk about their story, how they got started, what niche they specialize in. We've done a lot of stuff on tiny homes, container homes. ADUs are becoming quite popular with this strategy. And then I also interview service providers in this space that help integrate with tools to make your business scalable and be able to optimize your pricing and automate your messaging and maximize your bookings as well. So feel free to snatch that code. You can also look it up, B&B Investing Group on Facebook, and you can have access to not only future Facebook Lives, but you can kind of look and see some of the ones we've done in the past as well. Lastly, here is a QR code, and as well as my direct phone number. I can also help if you are personally looking at an opportunity. We also do a market analysis for you to help confirm a 12-month forecast with providing comps for other short-term rentals, so you can get a sense of what the competition is doing in that market. I also do management of properties, so we also manage properties for investors. We charge a 25% management fee, but we basically handle everything. You get a monthly statement of the revenue activity, and we kind of handle the entire process, including as well as setting up properties in the beginning as well. And then also, feel free to reach out if you'd like to have a quick chat with me about some of the investment opportunities we currently have, and to learn a little bit more about what your investment strategy is and see if it would be a good fit for you or not.
Wonderful. Thank you so much, Rich. Great questions, great participation, everyone. Yeah, so this webinar is recorded. It's going to be uploaded onto our YouTube channel within 24 to 48 hours, most likely later today. Also, too, you will get a copy of the presentation. Rich was gracious enough to provide a copy of the slides. I did upload it into where you can access it, but automatically, if you just email me, you'll get a copy as well. Just bear with me, one question I see. It says, great content, thank you so much. Yes, excellent content, Rich. Again, he's a subject matter expert, and we appreciate him just coming to knowledge share with you.
My pleasure. It's been great, Reneika, and I'm looking forward to chatting with some folks about their strategies and seeing how we might be able to help.
Absolutely. Let me go ahead and take possession of the screen. If you guys have any questions, you want to know more about self-direction, again, don't hesitate to reach out to me. Visit our website if you want to know more specifically about short-term rentals and how you can partner or work with Rich and his team. Definitely feel free to reach out to him. With that, I'm going to go ahead and end today's presentation, but thank you so much, everyone. Happy investing.